Sam, we're seeing a lot of headlines about the housing market turning around, but is that really the case?
Well, Lisa, the headlines can be misleading. The reality is that we're witnessing the largest real estate correction in Canadian history unfold right now. Prices are still adjusting, and the job market isn't providing the support needed to stabilize them.
What about the job market? I've seen some positive numbers on employment.
True, we added some jobs in June, but the overall trend is much weaker than it looks. Annual employment growth is now the slowest outside of a recession. Canada's net job growth has never been this slow outside of a recession. And many of those gains are going to people taking on a second job just to make ends meet. That's not a healthy sign for housing demand.
That sounds worrying. I've also heard about rising consumer stress. Can you elaborate?
Absolutely. Consumer insolvencies in Ontario hit levels not seen since the financial crisis. Ontario recorded its second highest number of insolvency filings since the crisis. Nationally, the number is also very concerning. And mortgage arrears are at the highest since 2014, with over 13,700 mortgages past due. People are feeling the pinch.
Let's talk about Toronto. I've heard sales are up. Is that a good sign?
Sales did rise compared to last year, but we need to look deeper. Active inventory dropped from last year's record highs, but it's still the second highest June total in over 30 years. And the average home price slipped by about 0.5% in June, erasing months of gains. We're not out of the woods.
And Vancouver, how is it doing?
Vancouver is holding up a bit better, but still fragile. The benchmark price slipped slightly and is down 6% from last year. Inventory is still elevated compared to the previous decade. The Fraser Valley especially has seen much steeper declines, so it's not immune.
What about other markets like Calgary and Saskatchewan? They seem to be doing well.
They're actually quite different. Calgary's overall average price is down 2% from last year, but condos have plunged nearly 9%. Apartment condominium prices saw the sharpest decline, falling nearly 9% year over year. Meanwhile, Saskatchewan shows a completely different picture. Sales are up, prices are at records, and inventory is low. So it's not a uniform story.
So where does that leave affordability? Is it getting any better?
Affordability has improved to the best level in 4 years, but it's still at levels comparable to the 1990s bubble. The phase of diminishing ownership costs could be nearing an end, and without strong income growth, it's hard to see further improvement. The job market isn't providing that support.
Any final thoughts for our audience?
For buyers, patience has been rewarded, and that hasn't changed. For sellers, you have to price realistically. Inventory is still high, and buyers are picky. And for everyone, this correction is an opportunity to get educated and work with someone who knows the market. The agents who thrive are those who specialize and provide real value.